Abhay Agarwal is joining us from Piper Silica to talk more about that. Abhay, thanks very much for chatting with us today. Good afternoon. We gather that you are meeting a host of ultra-high net worth individual investors over the weekend too. So it clearly appears. First, you tell us, how's the mood among them? Is there eagerness to buy this dip out? Is there more sign of calm returning? Or I'm sure the panic is past its peak among them as well.
Yeah, I don't think, Ajay, there is any panic. In fact, we didn't see any panic even when the Omicron wave was on, which I thought would be a more troubling thing even for long-term investors. But right now, as I talk to investors and family offices and some of the global investors also, everybody is right now looking at how do we play a recovery, how do we make money, which sectors will bounce back, which stocks will bounce back. So the conversation is around what are the opportunities to invest and how should one stage the investment? Is this a good time to, is there going to be a quick resolution to the war situation? So will there be a quick bounce back? Which are the sectors that are beaten down terribly that can see a pickup? So on the contrary, I would say instead of there being a panic, people are looking at tactical opportunities and opportunities to deploy capital.
Right. Since you met these investors, the bunch of investors in Mumbai, Abhay, I just want to understand: are people among the the affluent lot getting their asset allocation right, or even after seeing surge of domestic money into the market, if the SIP figure is any guide, hovering at the lifetime highs once again from mutual fund, but are individual investors adequately invested, or are they still looking at increasing their allocation and they are not fully, they are not suitably in the market yet?
So I would say that let us break up the for the simplicity sake, let us break the category of investors into two parts. One are those who are not actively involved in the markets and who look at investing in equity as a long-term wealth creation, saving management exercise. And it is heartening to see that this segment of the market has stayed invested, has continued with their SIPs, demonstrated tremendous faith in the potential of India in creating wealth for a long time. And then there are a bunch of investors who are closely watching the markets, and I think a large part of this, I would say, as much as 50% of this segment is probably under allocated to equity even as we speak, because they exited early on and they haven't got the full confidence to come back in. So this segment is still looking for tactical opportunities to start deploying some of the cash that they are sitting on.
Right. Abhay, how's your portfolio doing right now? Talk to us, if you can, some changes which you may have been making in the portfolio in the last couple of weeks.
So, Ajay, what we have done is that there were some stocks that we wanted to always buy, but we found them to be expensive. So in this correction, we have got the opportunity to add them to our portfolio, and two of them are Divi's Lab and LTI, or Larsen & Toubro Infotech, which are two companies that we believe are very well managed, and they are leaders, or kind of close to leadership position in very exciting growth spaces. So these are the two companies that we have added. We've also added a smaller company called Lemon Tree to our portfolio. And to create cash for these additions, we have exited two large cap financial services companies, HDFC Bank and HDFC Limited, because while these companies are excellent companies, market leaders, industry leaders, our worry is that based on the research that we have done, we are seeing a slowdown in their growth. So the growth will be there, but according to us, the growth will not justify the kind of returns that we look for from our portfolio companies.
What are you making of the commentary coming from these two large metal and mining majors on pressing the pedal on debt reduction, JSPL for that matter? In fact, they prepaid some money over the weekend as well. Similarly, Vedanta held the analyst call and reiterated their aim of debt reduction, even at the parent level, which was a fear. The market is treating them quite kindly today. Both are buzzing 5-7% in trade. Do you see more juice left in some of these metal names?
Yeah, I think so. I think the peak of the cycle this time has got extended. Normally we would see the peak plateau off and then enough supply coming in, and then, the prices of the product itself correcting. But this time, because of the war situation and a general inflation in commodity prices across the world, the peak of the cycle has got extended, which is allowing these companies to get their balance sheet into order and start, benefiting from a higher market cap, equity market cap. In fact, I won't be surprised if many of them start accessing the public markets for raising more equity capital to bulletproof their balance sheet while the going is good. So I think that may happen, and that would probably signal the top.
I'm curious to know more about this call of yours on going and adding one of the biggest API manufacturing companies in your portfolios. It's got the industry-leading margins, and it's a bellwether, of course. But I'm sure a lot of other API companies will also face the same factor that this one is. Talk to us about this theme which you like.
No, I think it's a very exciting theme. The reason that we have added Divi's more than API and the generic business is the custom synthesis business. And we are now confident, after engaging with the company for a long time, that the push on custom synthesis is not just to make people hear what they like to hear, but there is a genuine push towards custom synthesis, and the company is doing all the things that it can to generate business, because compared to a generic business which doesn't need to be sold, there are always buyers for generic products, and you make it and they sell, and it's typically low margin. Customer synthesis is something that is higher margin but requires sales skills, business development skills, and commitment and of capital ahead of time. So in Divi's case, we like that commitment. That is not to say that the other companies are not doing it or will not do so well, but we just wanted to go with one bet, and for us, that is Divi.
In fact, Lemon Tree, which the other name you have added to your portfolio right now as we speak, is talking to us on ETNow Sadesh. They have expanded their margins very wonderfully. But why did you like Lemon Tree out of all the other stocks that are buzzing right now in the hospitality space?
Lemon, because, I think a big thing there is the kind of management and the board that they have that gives us a lot of confidence about, appropriate capital allocation decisions. Because what happens is that this is a company that has high capex requirements, and you need to make sure that that capex is being spent on the right properties and not, and is correctly allocated to opportunities that will create value for shareholders. So in terms of their portfolio of properties, now they are across, premium, semi-premium, and mass market. And also they are now present in 80% of the cities where there are airports. So we believe that they have played their cards very well during the COVID lockdown time. They have become very lean, cut costs. They are using technology to cut costs further. So when the average room rates increase and the occupancy increase, these two things, when you multiply them together, give them a geometric expansion of top line and profitability. So I think this is a company that is poised, assuming there is no further lockdowns and economy opens up. I think this is one company that will see, benefit a lot from the investments and the expense cuts that it has made over the last couple of years.
Right. Abhay, what did you make of the commentary coming from Accenture regarding, they've also raised their growth guidance because now this IT long trade has been going on for over 2 years now. Do you see more durability in their numbers? And how are you looking at the valuation of large cap IT in light of all of this? Is it still not fully in the price, or now it is getting in the price?
I think valuations have run up from what they historically have been. But at the same time, it is, you talk to any of these large IT companies, and they are super excited about the growth that they can see immediately and, in future. So all of them are ramping up capacity, all of them are acquiring customers, all of them are getting business. So it is a space where margins are not compromised even as sales grow. So now it is only a question of, based on their product offering, which companies grow at what rate. But frankly, I think IT services, exports, IT services industry is poised for pretty remarkable growth for next 5 to 10 years.
Abhay, my last question. In fact, I really like that analogy you drew in your presentation about the scope of Indian market to expand, given that our entire market cap is 3 trillion and Apple's market cap is also around the same. So what are some of the factors you would watch out for very closely over the next 6 to 12 months, which will impact the market now that market is almost that the pre-Ukraine war issue, the war-triggered correction, so to speak. It may be far off from its all-time high, but at least above the level when war broke out.
No, I think we should poise for volatility. There will be, sharp spikes and sharp down days. But for long-term investors, they should look at this volatility as an opportunity, because what we have seen is that the global funds have increased their cash allocation to 5.9% compared to 5% in December. And this is higher than what it was even during the GFC in 2008, 2009. So there are a very large number of funds sitting on a lot of cash, waiting for, clarity on the war situation, on COVID, on Fed rate hike. So once these things resolve, auto-resolve, we are very confident that despite its premium valuation, India as a market will continue to attract capital. So I would say that, look, everybody should be invested to their asset allocation plan, and then use the sharp down days as a way to tactically deploy more capital to generate higher long-term returns. But frankly, I think if you just ignore the volatility, if you stay invested, I think beyond next 12 months, I think the investors will make good returns.
Excellent, Abhay. Always enjoy our conversations. Thanks so much for your time this afternoon as well. That was Abhay Agarwal of Piper Serica.